Morning, students. Welcome you all once again on the asset-based standard, which is Ind AS 40 investment property. I hope I am audible and my screen is also visible to everyone who are watching this session live. Yeah. So once again, a very good morning and warm welcome to all the students. So students, today we are going to discuss Ind AS 40 investment property. This is one of the asset-based standard. In our earlier standards, we have read Ind AS 2 inventories probably, Ind AS 16 property, plant and equipment, Ind AS 38 intangible assets, Ind AS 105 non-current assets held for sale, Ind AS 41 which is relating to agriculture related assets, I mean to say biological assets. So we have read around 4-5 asset based standard. This Ind AS 40 is also one of the asset based standard, right? And this is investment property. In our old accounting standard, there was no any standard which talks about investment property, but the reference of investment property was given in AS 13, which is accounting for investment, right? So how this investment property is different from investments? When I'm talking about investments, it could be investment in financial instruments, it could be investment in gold, investment in mutual funds, investment in equity shares, investment in debentures, right? But when I'm talking about property, investment property, what do you understand by property? What do you understand by property? This is not a new word. You must have heard this word from your parents, from your friends, from your relatives, that we want to buy a property. So what do you mean by property? So property means land or building. Am I right? If someone wants to buy a building, someone wants to buy a flat, someone wants to buy a plot of land, so probably he is talking about buying a property, right? So property is something different from these mutual funds, from gold, from other liquid instruments or from other financial instruments. So this standard talks about investment property, right? It means this standard talks about immovable property. This standard talks about land. This standard talks about building. This standard talks about land and building. This standard talks about land or building, right? So we understood that this standard talks about two kind of assets. One is land, second one is building, right? Either it could be land or building, either it could be land and building, right? So students, in old accounting standard, which you have read in CA Inter or I would say IPCC, this investment property concept was covered in AS 13 accounting for investments. But there was no separate standard which takes care of investment property. But under Indian accounting standard, Ind AS 40 takes care of investment property. Means if a company has made an investment in a property, so how that investment property has to be accounted for, when that investment property has to be recognized as an investment property, what are the subsequent measurement rules for investment property, what are the disclosure for investment property, this is given under Ind AS 40. If I talk about global scenario from the global perspective, if any of you has opted for GFRS paper, right? So in GFRS, IFRS is there. So in global scenario, in IFRS, there is a parallel standard which is IAS 40. As you guys have understood that Ind AS are the converged version of IFRS applicable to India, right? So our standard have been drafted as per IFRS standard. So this Ind AS 40 is the Indian version of IAS 40, International Accounting Standard 40, right? If I talk about the difference between Ind AS 40 and IAS 40, so there is one carve out in Ind AS 40. Carve out means, so we have deviated or we have taken a different treatment in Ind AS 40 in comparison to IAS 40. So there is one carve out in this standard, right? Which we are also going to talk about. So now you have understood about AS 13, Ind AS 40 and IAS 40, right? Now you have understood that as far as title is concerned, we are talking about two assets, land or building, right? Now it is important to understand that why this separate standard is there, right? Why this separate standard is there. So we'll talk about that, but let's come to the Agenda first. What is the agenda of this standard? Of course, we will be talking about objective and scope. Every standard has some objective, and what is the objective of this standard? We are going to discuss. What is the coverage of this standard? We are going to discuss. So these two items are important, that why this separate standard is there. Then we will be understanding the meaning of investment property. We will be understanding the meaning of owner occupied property. But this owner occupied property is nothing, it's like a property, plant and equipment. So the concept of owner occupied property is nothing, it's a property, plant and equipment. So owner occupied property means Ind AS 16, right? But the word used is owner occupied property here. Then we will be talking about the accounting part, which is recognition, right? Which is recognition. When a property, investment property is going to be recognized, when a property is going to be recognized as an investment property under this standard. What is the measurement criteria? Okay. When I'm talking about measurement, I'm talking about the measurement at the initial recognition and measurement at the subsequent recognition. If a company has purchased a property, which is an investment property, on 1st July 2022, then at the date of purchase, what is the measurement criteria? And again, at the reporting date on 31st March 2023, what is the again subsequent measurement criteria at the subsequent recognition or subsequent measurement, right? Like depreciation is required to be charged, impairment has to be checked, right? So then we are going to talk about the measurement criteria. Like in Ind AS 16, the initial recognition, initial measurement is at cost. The subsequent measurement is at cost or revaluation model. The same example was there. The same criteria was there in Ind AS 38 also, right? Then we will be talking about the transfer and disposal, which is a new concept. Transfer is a new concept under Ind AS 40, right? That if an asset is moving from investment property to inventory, if an asset is moving from investment property to property, plant and equipment, right? Or if an asset is moving from PPE to investment property, then what should be the accounting criteria, right? We are going to discuss about that. Then we will be talking about the disclosure part of investment property, right? So this is the agenda of this standard. As far as this standard is concerned, this is a very small standard, I would say. I call this standard as a short and sweet standard. Second, if you guys have already covered Ind AS 16, so I have taught you Ind AS 16, and other faculty has also taught you Ind AS 38. So if you understand Ind AS 16 and Ind AS 38, the major concept is from those two standards only, right? New concept is not there. So I mean to say, if I talk about recognition criteria, measurement criteria, right? So the similar criteria is there, which we have already covered in Ind AS 16 or Ind AS 38. So we will use this standard as a revision also. Okay. But of course, yes, investment property is a new concept which we have not covered there, right? But if you remember, when I was teaching you Ind AS 16, I have told one thing, if you remember. So I have told you what is the definition of Ind AS 16 PPE. So property, plant and equipment are tangible item which is held for use in production or supply of goods and services, held for administrative purposes or held for rental purposes. You remember that word, held for rental purposes, and has to be used for more than one period or more than 1 year, right? But I have told you one exception there. You remember, I have told you one exception. I have told you that if a land or a building is held for rental purposes, then that land or building will not be covered under Ind AS 16. That is an exception, right? But if a machinery, and I have taken an example of a crane, for example, a JCB, there is a crane, and that company has given a crane on a lease basis to one of the construction company, right? So that construction company which has taken on a lease basis, or which has given on a lease basis, right, that particular equipment, that crane, that machinery, so that machinery will be covered under Ind AS 16, even that equipment is on a rental basis. But if a land or building is on a rental basis, then it will not be covered under Ind AS 16. Why? Because that land or building has to be covered under Ind AS 40, right? Clear? That was the exception in Ind AS 16. Why? Because Ind AS 40 is there, right? Then we will be talking about the key differences between IFRS and Ind AS. Okay. So coming to the objective of this standard is to prescribe the accounting treatment for investment property and related disclosure requirement. So this standard talks about the accounting treatment for investment property and related disclosure requirement. So friends, let's understand why this separate standard is there first of all. So friends, land and building is kind of an item. If you just purchase that land and building, right? Normally the price will appreciate or the price will depreciate. What is your view? If you guys have purchased land or building, what is your view? What is your view? Whether the price will appreciate or price will depreciate? Price will appreciate normally, right? Price will appreciate. Okay. If you have purchased a land or building, if you just keep that land or building as it is, even though you are not using that land and building, the price will appreciate, right? So land and building is kind of an item where even though if you are not using that asset, the price will appreciate, right? For example, my grandfather has purchased a plot of land near, let's say, near this Yamuna Expressway, right? Greater Noida. So earlier it was completely jungle, right? And he purchased that plot of land. He just leave that plot of land, right? So the Yamuna Expressway bypass has, has been constructed. The facilities are improved. The facilities have been improved. So the price has increased manifold, right? So even though somebody is not using that land or building, right? Somebody is not using that land or building, still the price is going up, right? So if it is not getting used, so it is not a PP. Am I right? It is not a PP. Is it a PP? Because for being a PP, it has to be used. There must be a future economic benefit. Am I right? What is a PP? A tangible item which is held for use in production or supply of goods and services. The company has purchased a plot of land and the company has just left as it is, right? The company has purchased and the company has kept that as it is. The company is not doing any activity on that plot of land. So the point is, if a company has purchased an investment property, if a company has purchased a property and company is not using that property in the business purposes, it is not your PP, because it is not meeting the definition of PP, right? Now the company is also not purchased for the purpose of sale only, right? For example, the construction companies or real estate companies are purchasing this land and building for the purpose of sale. It is also not for that purpose. So now the question arises, if a company has purchased a land or building which is not in the use of a business, which is not held for sale in the ordinary course of business, but of course it is an appreciable asset, it is not an impaired asset, right? For example, if you are not using a machinery, you have purchased a machinery but you are not able to use a machinery, so probably the impairment will trigger. The impairment indicator is there. You are not able to use that machinery. The machinery is not giving any productivity, any output. So impairment indicator will trigger. And of course, it will subject to the impairment. It will subject to the depreciation. Or even if you probably will de-recognize that machinery because you will not getting a future economic benefit from that machinery. But if I have purchased a land or a building, should I de-recognize that land or building? Should I expense it off? Knowing that I had invested 1 lakh rupees. Now the value has become 1 crore rupees. Right? So what I'm trying to let you guys understand that why these two assets is carrying a separate standard, right? These two assets are carrying a separate standard because the features of these two assets are different from the other assets, right? You purchased a car. Let's say Viraj has purchased a car. and Viraj has purchased, let's say Viraj has purchased Skoda Kushaq, right? And Viraj has invested around 20 lakh rupees. So if Viraj will not use that car, Viraj, whether that car will depreciate or that car will appreciate. Of course, the battery will get down, right? The engine will get stuck, right? So the value of that car, even that car is not getting used. The car is just lying as it is or lying idle in the garage, right? Still, the value of the car will go down, right? The car will get impaired, right? But the same case is not with the land or building. Viraj has again purchased a flat in Bandra, right? And Viraj is not using that flat at all for the last 2-3 years. Okay, he put a lock on that flat and is not using that flat. So whether the flat which is lying idle, the value will appreciate or the value will depreciate? Of course, the value will appreciate. In all ideal scenario, the value will appreciate, right? So that is why these two assets are somehow different from all other assets in the world, right? So friends, that is why a separate standard is given for these two assets, okay, which is land or building. But every land or every building is not covered in investment property. Every land or every building is not covered in investment property. So which land or building is covered in investment property? So I'll take some example and you tell me whether it is an investment property or not an investment property. A company has purchased a land for the purpose of constructing a factory. Friends, the company has purchased a land and the purpose is construct a factory. So whether this land will be covered under Ind AS 16 or Ind AS 40, tell me. Whether this land is meeting the definition of PPE or meeting the definition of investment property. I have not told you the definition of investment property. I've just given you some highlights about that. Tanuku is saying it is not an investment property, right? It is not an investment. You're right. Why? Because that land is getting used for the production or supply of goods and services, right? Because it is used for the factory purposes, and in the factory the production will happen. So that land will be PPE, right? Clear or not clear? Yes, the land. Yes, Manini, the land will be the PPE. You're right. Second example, DLF. Have you heard about DLF? DLF is a real estate company. It's a big company. DLF is buying lands. DLF is keeping lands for the purpose of constructing flat and selling the flat, or for the purpose of selling the plot of land. So whether that land is an investment property or is an inventory for DLF? Is it an investment property or is it an inventory for DLF? Yeah, right, Pooja? It is an inventory for DLF. You're right. You're right, Rahul. It is an inventory for DLF, right? So friends, every land, every building is not an investment property. You have to see what is the use for that land or building. Sir, then what is an investment property? Have you understood? Have you understood? So if a land or building is held for sale in the ordinary course of business, it is your inventory. If land or building is for normal business purposes, right? If the land or building is for business purposes, is used for business, for the production, for the headquarter, for the office purposes, it is your PP. It is not your investment property. The company is using the building for its office purposes. So is it an investment property or is it a PP? It is a PP, property, plant and equipment, right? Is it clear? So Viraj has asked a question, sir, whether dam is an investment property as per Ind AS 40. Viraj, you will get your answer in the next 5 minutes, right? You will get yourself the answer. Friends, if you have understood why this separate standard is there, the separate standard is there if a land or building which is not used in the business purposes, which is not held for sale in the ordinary course of business. Sir, held for sale भी नहीं है, used for business purposes भी नहीं है. It is not meeting the definition of PP. It is not meeting the definition of inventory, right? And it is not held for sale also in the, even not in the ordinary course, even not in the other than ordinary course. For example, if a fixed asset, I mean to say PP, intangible asset, or an investment property is held for sale as per Ind AS 105. You have read Ind AS 105 na? The asset is available for immediate sale in present condition and sale is highly probable. Even though if these two conditions are meeting, right, it will become your non-current assets held for sale, right? So even the company don't want to sell that also. So it is not a non-current asset held for sale. Then what it is? Standard says that if it is not meeting all this scenario, it will be your investment property and all the provisions of Ind AS 40 will be applicable, which we are going to understand, right? Clear? Is it clear, guys? So coming to the scope part, this standard shall be applicable in the recognition, measurement and disclosure of investment property. This standard does not apply to biological assets. Ind AS 41, mineral rights and mineral reserves, right? So of course, this standard is not applicable to biological assets. We understood that this standard is only applicable to land and building, right? This standard is not applicable to plant. This standard is not applicable to animal, right? So why the standard has specifically scopes out these two standards? Because probably you may say that, sir, this biological asset, this plant is an immovable property. So will it be covered? Answer is no. Mineral rights and mineral reserves, it is again part of the earth, right? So is it an investment property? Answer is no. Please remember, only two assets are investment property: land, building, land or building, land and building, right? That's all. Now, what is the definition of investment property? See, the definition of investment property. Investment property is a land or building. Investment property is a land or building which is held for two purposes. Two assets if held for two purposes. First of all, I'll simplify this definition. Two assets, land and building, held for two purposes: rental purpose or capital appreciation purpose, right? These are the two basic nature of these two assets. The company has purchased a land and building, and the company is not engaged in the sale of that land and building in the ordinary course of business. In the ordinary course of business, right? The company is not using that land and building in the business purposes. Then what is the use? So there could be two alternate use. One, probably the company is earning rental from these assets. The company is earning rental. Second, the company has just kept these assets idle. Idle means for the purpose of capital appreciation, right? Ki after 5 years, after 10 years, when the value will increase, of course, then probably if required, I will sell that asset, right? So either the intent or objective is for capital appreciation, or the intent or objective is to earn rental, right? So if these are the two intents on these two assets, then this asset will be covered as an investment property. So what is the definition of investment property? Land and building which is held for rental purposes or held for capital appreciation purposes, or both purposes, that will be covered under investment property. Is it clear? Rather than for use in the production or supply means PP, or sale in the ordinary course of business means inventory, right? Okay. So the company has not purchased land or building for the business purposes or for sale in the ordinary course of business, right? If these two objectives are not there, and what are the two objectives? The two objectives is to earning rental or earning capital appreciation. Then this two asset will be covered as an investment property. You remember? See, the capital appreciation word has also given here. Why? Because this is the basic feature of land or building. Generally, land or building appreciate. It does not depreciate. Does not depreciate means value will not decline. Depreciate, building will depreciate, but the value will not decline, right? Is it clear? Is it clear? Manini is saying, sir, but the money from its sale is used in the business. Manini, you don't have to look at that, right? That what is the where the money will be used, but what is the use of the asset, that is important from the asset classification. Is it clear? Is it clear? So you are not required to look at that that money which is coming out. For example, inventory. So Manini, let's say you have sold the inventory. You are using that money for buying a property. So that inventory will be inventory. That inventory will be current asset. It will not become your non-current asset, right? Why? Because you are saying that when money will come, I will invest in the property, plant and equipment. No, it will not be the case, right? It will always be your inventory, current asset. So you don't have to look at that if it will sold out, the money will come. Where I will invest the money, that is not important. What is the use of underlying asset, that is important from the purpose of classifying it as an asset in the books of accounts. Clear? Okay. Viraj has asked a question of dam, whether a dam is a investment property. So Viraj, the dam does not belongs to a private party, even though it belongs to a private party. Whether the dam is held for capital appreciation or held for rental purposes. Yeah. Whether the dam is held for capital appreciation or a rental purposes, answer is no. You cannot say that I have let out this dam, or you cannot say that if tomorrow the value of the land will go up, I will sell that dam. Sorry, if the tomorrow value of the dam will go up, I will sell that dam, right? It cannot be. So it is not an investment property. Sir, if the government of India is, let's say, if the government of India is showing that the dam in the balance sheet, so what should be the classification of the dam? Probably it is your PP, probably, right? So Koshiki is saying, sir, if there is a building alone, its value will also decrease if depreciate. Yes, Koshiki, in the books of accounts, the value will depreciate, but the fair value will, in all the normal course and ideal scenario, the fair value will also appreciate, right? Is it clear? Is it clear? Okay. I just pasted these two pictures of investment property, right? Now there are some examples of, let's discuss some example of investment property. And before discussing these example, let's understand these two concepts, the two more concepts of investment property. So guys, have you covered Ind AS 116? Whether 116 has been covered? Leases standard has been covered or not covered so far? Have you gone through with the leases standard? Ind AS 116? Yeah. Okay, it is not covered. Okay. Probably when it will be covered, so when you understand the leases standard in Ind AS 116, basically there are two parties, lessor and lessee, right? One is lessor and one is lessee. If I talk about lessor, so the lessor accounting is somehow similar what you have read in AS 19. I believe each one of you has already covered AS 19, accounting standard 19, which is leases standard, accounting standard. You have covered that standard in your IPCC. The second one is lessee accounting, right? So friend, in who is a lessor? For example, a company who is having a building, right? And the company has given that building on a rental basis, right? So that is an operating lease. That is an operating lease. If the company has given the building on a rental basis for the substantial period of life, for example, the life of the building is 20 years, and the company has given that building on a rental basis for 16 years, for 15 years. So it will become your finance lease, right? So you guys have understood that if an entity is a lessor, and entity is giving that property on a rental basis, right? And if that arrangement is an operating lease, in that case, the asset will lying in the books of the lessor. But if the arrangement is finance lease, in that case, the asset will be de-recognized from the books of lessor and asset will be recognized in the books of the lessee. Am I right? So this is what we have discussed in AS 19. This is what we have learned in AS 19, right? So the question arises, sir, For example, the definition of investment property is investment property means land or building held for rental or capital appreciation purposes. So I am a company, I have a building, right? And I have given that building on a rental basis. In that case, you have to look at, is it an operating lease or is it a finance lease, right? If it is an operating lease, that asset will be lying in your books of accounts. If it is a finance lease, according to legal standard, that asset has to be de-recognized from your books of accounts and asset has to be recognized in the lessee books, right? So if it is a finance lease arrangement, in that case, asset will not be there in your books of accounts. So if asset will not be there in your books of accounts, in that case, if the asset is not there, then of course the question of classification as an investment property will not arise. Are you getting me? Are you getting me? The question of classification as an investment property will not arise at all, right? Why? Because asset ही नहीं है books में. It has already de-recognized due to the finance lease arrangement. Is it clear? Is it clear? Yeah. Is it clear? Okay. Yeah. The second concept is lessee. Now there are two different stories. When you read Ind AS 116, Ind AS 116 says that if you are a lessee, from the lessee perspective, the concept of operating lease and finance lease is not there, right? For example, I am X Limited. I have taken a building on a rental basis. So I have taken a building on a lease basis, right? I'm a lessee and I have taken this building for 2 years, right? In this case, even this building is for 2 years on rental basis. So I have to create a right of use asset and lease liability in my books of accounts, right? In Ind AS 116, from the lessee perspective, the concept of operating lease and finance lease is not there, right? In our old accounting standard, when a lessee, when a tenant or a lessee is taking an asset on a lease basis, the lessee is only debiting the expense as a rental expense debit to landlord account or to lessor account, right? And lessor account debit to bank account. Simple. But in Ind AS or IFRS, if a lessee is taken an asset on a lease basis, the lessee has to create a right of use assets and a lease liability in the books of accounts. What is the right of use asset? For example, the lessee has taken that building for 2 years, right? So what will be the 2-year rental? The lessee has to compute the present value of the lease rental, present value of 2 years rental. The lessee has to compute the present value of the future rentals, right? For example, the yearly rental is 1 lakh rupees. 1 lakh rupees for the first year, 1 lakh rupees for the second year. The discount rate is 10%. So what is the present value? The present value for first year rental is, let's say, the first year rental is 1 lakh rupees. The second year rental is 1 lakh rupees. So the discount rate is let's say 0.919, right? 10% discount. The second year discount is 0.824, for example. So in this case, it will come out as a 91,900. It will come out as 82,400, right? So what is the present value, total present value? It is coming out at, let's say, 1,74,300. So the lessee has to create a right of use assets by 174,300 to lease liability 174,300. This is Ind AS 116 concept. I'm not teaching you Ind AS 116 right now, right? So this is kind of a finance lease accounting, I'm not saying finance lease accounting. This is kind of a finance lease accounting where lessee has to create an asset, which is a right of use asset, on the basis of present value of the lease rental over the lease term, right? If the lessee will debit asset, what he will credit? He will credit lease liability, right? This asset will be depreciated over the lease term. This lease liability will be unwinded by paying the rentals, right? I hope it is clear to all of you. Now the question arises, if a company A Limited has taken a building on a rental basis, right, from the lessor for 2 years. So there will be a right of use asset. In that case, there will be a right of use assets. Okay. So that right of use asset will be, whether that right of use asset will be investment property or it will be PP. What is the classification of the right of use asset? So friends, again, it will depend. If the lessee has taken that building for the purpose of subleasing, right? For the purpose of subleasing, in that case, it will be investment property. But if the lessee has taken that building on a rental basis for the purpose of office purposes, for the purpose of business, in that case, it will be your property, plant and equipment. That right of use asset will be classified as PPE. Is it clear? Is it clear, guys? Yeah. Great. Great, friends. Viraj is asking, sir, if dam is given on rent, then Viraj, the dam, first of all, the dam is not land and building, right? If tomorrow you will ask, sir, what is the classification of river? What is the classification of pond? Right? The dam, please understand, there is no alternate use of dam. You cannot say that I have given the dam on a rental basis, right? So it is not an ordinary use that it has to be given on a rental basis. It has to be given, it is held for capital appreciation, right? So generally it is not happened. Okay. So in that case, it is not an investment property at all. To my mind, it should always be your kind of a PPE, right? It should not be investment property. Right, guys? I hope it is clear to all of you. Now let's discuss some examples of investment property. Land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business, right? Of course, if it is for sale in the short-term sale means inventory. If it is held for short-term sale in the ordinary course of business, then it will be your inventory. It is not your investment property. It will be covered under Ind AS 2 inventory, right? Land held for a currently undetermined future use, right? If an entity has not determined that it will use the land as a PP, owner occupied property means PP, or for a short-term sale in the ordinary course of business, the land is regarded as held for capital appreciation. For example, the company was having some surplus money, surplus funds, and the company has just invested those surplus funds into some plot of land, right? There was some, some sites, there was some construction going on, there was some real estate developer who were just doing the plotting thing near highway, near expressway. So the company has just invested the money, right? The company doesn't think about that, what the company has to do with that land, whether in future they have to construct a factory on that land, or they have to do the plotting, they have to do they have to sell that land. So just the company has purchased and kept it as it is, right? So there is no determined future use. Okay. So as of now, the company does not have any determined future use, right? If the company has determined future use, that yes, we have to construct the factory on that land. In that case, there is a determined future use, or the company is acquiring that land for the purpose of constructing flats and then selling the flats, or the company has acquired the land for the purpose of doing the plotting and then sell those small plots to the buyers, right? So in that case, it is a determined future use, right? So if it is for construction for business purposes, of course, in that case, that land will be classified as PP. If it is for sale in the ordinary course of business purposes, of course, it will be classified as inventory. But the moment the company has purchased the land, there was no determined future use. It was just purchased for the sake of purchasing. That's all, right? In that case, standard says that it will be classified as an investment property, considering that the land is held for capital appreciation, right? So it will be covered. It will be covered under investment property. Okay. So in this case, land held for long-term capital appreciation. If it is held for long-term capital appreciation, it will be covered under Ind AS 40, right? But if it is short-term sale, then it will be covered under Ind AS 2. Clear? Is it clear? Yes, Manini, you are right. You are right. That is why I have clarified this. Okay, guys. Third example, a building owned by the entity. A building owned by the entity. For example, I am a company. I am having a building. I'm an owner of the building, and I have leased out that building to my tenants. Of course, again, it is a rental purposes. So a building owned by the entity and leased out under one or more operating leases. Why the word operating leases is written here? Because if I am owner of the building and I have leased out under finance lease, so the asset will not be there in my books. The asset will go to the lessee books, right? Clear? So that is why they have mentioned it categorically, because from a lesser perspective, the concept of operating and finance lease is also there, right, guys? Or held by the entity under lease as a right of use asset, as a right of use asset, right? Or if I am a lessee, right? And I have sublease that property. Sublease means for the rental purpose. In that case, as I have explained you, it will be your investment property only, right? So this will be your investment property. A building that is vacant. So if, for example, you purchased a building, and the moment you have purchased a building, so probably immediately you will not get the tenant, right? So you have just listed that property to some property brokers, right? Some property dealers, and right now it is vacant, but the purpose is to lease out, right? So friends, you don't have to look at from that perspective. Oh, so right now, is there a tenant or not? It is not important. The intent is important, the purpose is important, the objective is important, right? So if a building that is vacant, but again the objective is to let out, in that case it will be always your investment property, right? So the intent is important. Property that is being constructed or developed for future as an investment property. The company has purchased a property, let's say land or even a building, and the company is developing or doing some construction on that, right? And the construction purposes is again to be used as in the future. So basically that building has to be used for the purpose of rental purposes, right? So if the future purpose is also investment property, right, or the company is doing the construction so that the company will got the good value appreciation, right, in future. So the company is, let's say, purchase a plot of land and the company has just put the boundary wall around that, right? And the company is also constructed one, let's say, one bungalow, so that it can be used, so that it looked like a farmhouse. And probably in the future, the value appreciation will be much more, let's say, right? The intent is not to earn money from that right now, from the selling purposes, right? So if something where the future intent is also capital appreciation or rental purposes, and the construction, the company is doing the construction or developing that property for future use as an investment property, that property will be considered as an investment property, right? But what happened if the company has purchased a land and the company is doing the construction for the purpose of using it in the business, like using that building as an office headquarter or using that building as a factory? In that case, it will not be investment property, it will be PPE. Right, guys? Right, guys? Is it clear? Viraj, Manini, Koshiki, Pooja, Rahul, Tanuku, is it clear? Or do you have any doubt? Do you have any doubt, or is it clear? Let me know if any doubt is there. So Manini is asking, sir, if a temple is constructed in company's land, then? So Manini, the temple is not for capital appreciation or not for rental purposes or not for the business purposes, right? It is for the auspicious purposes, right? So if there is a plot of land, right? Let's say I have purchased a land on a Agra highway, and just from the auspicious purposes, I have constructed a temple on that land, right? But my intent is either undetermined future use. I have not determined right now what I have to do with that land, My intent is capital appreciation. If it is undetermined future use, the standard is saying that there is a rebuttable presumption that you have held that land for the capital appreciation purposes, right? You have held that land for the capital appreciation purposes. Okay. So in that case, of course, the temple is neither PP, the temple is neither investment property, the land. Okay. The value of that land or the land will be always continue to show as an investment property, right? Is it clear? Is it clear? Viraj sir, what about shipping ports given on lease basis? Money, the value of the temple may be added to the cost of the land in that case, right? So Viraj, let's say Adani Ports, right? Adani has acquired a port, right? And Adani is leasing that port to some companies, right? So Viraj, in that case, what is the objective of that port? The objective of that ports are, again, please try to understand that. For example, say put some facilities there so that it can be I have put some facilities there so that that land can be used for different purposes, right? That port is not simply a plot of land. Please try to understand that, right? Whereas if you will look at any port, there will be heavy machineries on that port, there will be a huge construction on that port, right? So that the ship may come, so that the loading and unloading may happen, right? And then they are leasing that port. So that port is not only a plot of land. There is a lot services about that. There is a lot of services which is related in that port. Right? In that case, it is not a land or it is not only a building which is held for rental or capital appreciation. It is completely a business model, right? In that case, that port, that shipping port is not a land or it is not a building, right? It is kind of a property, plant and equipment which is used as a business model, right? It is not a, it is not a, it is not your, what would I say? It is not your investment property. Okay. Is it clear? Is it clear, guys? Okay, good. Examples, not an investment property. So as I've told you, the property which is held for sale in the ordinary course of business, it is not an investment property. Why? It will be covered under Ind AS 2. Property that is leased to another entity under finance lease. So if it is leased under a finance lease, question of classification does not arise. Why? It is not an asset. It will not continue to be asset in the books of the owner, right? As per Ind AS 116. As per Ind AS 116, एसेट ही उनकी बुक्स में नहीं होगा, राइट? Owner occupied property means PPE, like shipping ports, it will be Ind AS 16, right? So if investment property, I mean to say land or building, has to be used for the business purposes, for the business purposes, it will be your Ind AS 16. Held for sale in the ordinary course of business, it will be your Ind AS 2. If it is leased, given on rental purpose, given on a rental purposes, and the arrangement is finance lease, it will no more be asset, right? In the books of the lessor. Clear? Is it clear? Is it clear? I hope it is clear to all of you guys. So Kochiki, you will get your answer after 10-15 minutes, right? And then when I'll speak about the business model, you will get your answer. Okay, guys. So this is something which I have extracted from the study material, right? Tell me two things. So these are some examples, and you have to tell me whether it is investment property or not an investment property. Second, you have to tell me if it is not an investment property, in that case, whether it will be covered under so it will be covered under which standard in that case, right? Is it Ind AS 2, is it Ind AS 16, or is it Ind AS 105, or is it Ind AS 40? What it is, you have to tell me, right? First, you have to tell me whether it is investment property. whether it meet the definition of investment property. Does it meet the definition of investment property? The definition of investment property, right? You have to tell me. Second, you need to tell me which Ind AS is applicable. Which Ind AS is applicable, right? So you have to tell me these two things: which Ind AS is applicable, and does it meet the definition of investment property? Owned by a company and leased out under an operating lease, right? The company has owned a building, right? And the company is leasing that building in an operating lease. Tell me whether it is meeting the definition of investment property. Yes. Yes, it is meeting. Which Ind AS is applicable? If it is meeting the definition, Ind AS 40 is applicable. Right, guys? Second, the company has held as a right to use asset. So the company has taken a building on a lease basis, and that building is a right to use asset in the books of the lessee, in the books of that company, and leased out under an operating lease, and the company has subleased that building on a rental basis, right? For example, so nowadays in Gurgaon, in Gurgaon, this business is also, this is a very, very good business, I would say. So a person is taking a building on a rental basis, right? And the person is leasing that building to the students, right? Or to the office persons, right? So it is for a sublease basis. So tell me whether it is meeting the definition of investment property or not. Yes. The objective is rental purpose. The objective is earning rental. Yes, it is a business purpose. Sorry, it is a rental purpose. It is meeting the definition of Ind AS 40. The ROU will be classified as investment property. Right, guys? Third, held as a right to use asset and leased out under finance lease. So held as a right to use asset. For example, I'm a company. I have taken a building on a lease basis. Of course, I have created right of use asset, but I have subleased that building. But that sublease is a finance lease. If that sublease is a finance lease, that asset will not be survive in my books. So if that asset will not survive in my books, then what will happen? Of course, it is not an investment property, right? Asset is not there, na? So which Ind AS is applicable? Ind AS 116 is applicable. According to Ind AS 116, this asset will not be there in my books, and hence the classification as an investment property does not arise, right? The question does not arise. Property acquired with a view for development and resale. The property acquired with a view for development and resale. The moment the property has been acquired, the intent is to develop and sell. So it means it is held for sale in the ordinary course of business probably. So it is not meeting the definition of investment property. It is meeting the definition of Ind AS 2. It is just like a raw material. The property has been purchased like a raw material, and it has to make as a finished goods, and then it has to be sold out, right? Is it clear? Is it clear, friends? Okay. Yes. Question number 5. Property partly owner occupied and partly leased out under operating lease. Partly owner occupied, partly leased out under. So friends, this point I am parking for let's say for 5-10 minutes, right? I will discuss concept and then I'll cover this part, right? This I'm not covering right now. Okay, this I'm not covering. Right? So this part I will be cover after explaining some concept, but right now I'm not covering this part. So what it is saying, that partly owner occupied means there is a property, there is a building, The building is using partly for the office purposes and partly for the rental purposes, right? Land held for currently undetermined use. Land held for currently undetermined use. Is it meeting the definition of investment property? Yes or no? Is it meeting the definition of investment property? Land held for currently undetermined future use. Yeah. Yes. If it is held for currently undetermined future use, the future use is not determined. It means it will be considered as a held for capital appreciation. So yes, it will be Ind AS 40, right? Property occupied by employees paying rent at less than market rate. Property occupied by employees. For example, if you have seen the public sector undertaking PSUs, right? So these PSUs have their plants at remote areas. So they have already created a township, right? They have constructed some buildings, and that building, they have given these buildings to the employees, right? So if the employee is relocating to their plant, they are also providing the residential facility, right? And employee is paying a concessional rent there, right? For example, the market rent is 20,000 rupees. So they are paying, let's say, 10,000 rupees or 5,000 rupees. Okay. So if property occupied the employees paying rent at less than the market rate, paying rent at less than market rate, in that case, what will happen? Right? So guys, tell me in this case, whether it will be investment property or it will be the point number 7 is your PPE. What will happen? Property occupied by employees paying rent at less than market rate. So friends, it is not an investment property. Why? Why it is not an investment property? The objective is not only to run on rental, the objective is business purposes also, right? So why these companies are creating township? These companies are creating township so that the employee will work in those companies, right? Otherwise, the employee will not willing to come there. Are you getting me? So this is the reason. So this is the business reason. Giving the premises to employee, employee is not outsider. Giving the premises to employee is for a business purposes. So it is not meeting the definition of investment property. In that case, it will be covered under Ind AS 16. The township is not investment property. The township is Ind AS 16, property, plant and equipment, right? So that is why they are paying a rental which is less than the market rate. Okay. But if the company has, let's say, the company has constructed some building and it is open for all and it is at market rate, in that case, what will happen? In that case, it will be investment property, right? Have you understood this, guys? Yeah. Is it clear? Investment property held for sale. Investment property held for sale. So guys, investment property held for sale. So there is an investment property, but now it is classified as held for sale. So when an investment property classified as held for sale, whether it is held for sale, I mean to say whether it will continue to show it as an investment property or it will continue to show as it will be shown as non-current asset held for sale. If a non-current asset, investment property is a non-current asset. If any non-current asset is held for sale, it will be covered under Ind AS 105. It will not be covered under Ind AS 40 or Ind AS 16 or Ind AS 38, right? It will be your Ind AS 105. So it is not meeting the definition of Ind AS 40. It is meeting the definition of Ind AS 105. Ind AS 105, right? Clear? Any doubt? Any doubt in this case? Any doubt in this case? Koshiki is asking, sir, in point number 4, why it is not investment property as we seen where it is constructed for future purpose of investment property. Koshiki, please read this point number 4 very carefully. Property acquired with a view for development and resale. The property is acquired for the purpose of resale, right? It is not written that the property is acquired for capital appreciation. So capital appreciation means for long-term purposes. The purpose is not long-term, the purpose is resale. So the moment the company is acquiring the property, it is for resale purpose. So it means it is held for sale in the ordinary course of business, right? The business model or the objective of the company is to buy the property and sell the property, right? That is why it is covered under Ind AS 2. Is it clear? Is it clear? That is why it is inventory, na? Inventory is always short term because the intent is always to sell, right? But in case of investment property, the intent is not always to sell. The intent is to keep it for the long term purposes. Whenever it is talking about capital appreciation does not mean कि आज मैंने खरीदा 2 महीने बाद बेचूंगा तो थोड़ा मुझे benefit मिल जाएगा, right? It is not short term objective. The objective is long term. So that is why it will be your investment property, and investment property is a non-current asset. It is not a current asset. It is just like a subset of PPE, right? Clear? Okay. Yeah. Existing investment property that is being redeveloped for continued use as an investment property. So there is an existing investment property. There was a building, and in the building there was 3 floors, right? And all the 3 floors was there on a rental basis. Now the company is constructing 4th floor, and the objective of 4th floor is also to provide on a rental basis. So friends, in that case, whether it will be investment property or not an investment property, of course it will be investment property, right? Is it clear? Is it clear, guys? Yeah. I have just left question number 5, that property partly owner occupied and partly leased out under operating lease, right? So I have not covered that. I will be covering after explaining you one concept, right? Then I'll come to this. Now, what is the owner occupied property? Owner occupied property is nothing. It's a property, plant and equipment, as simple as that. Ind AS 16. It is a Ind AS 16. Is a property held. I am not reading this bracket definition. I'll read it later on, right? So owner occupied property is a property held for use in the production or supply of goods or services or for administrative purposes. It is the same definition which is there in PPE, right? So if a company has acquired a property which is land or building for the purpose of using in the production or supply of goods and services or for administrative purposes, then it will be your PPE, owner occupied property. For example, for factory purposes, for example, for godown purposes, for warehouse purposes, right? For example, for what would I say? For office purposes, right? Administrative purposes, it will be your owner occupied property. It will be your PPE, right, guys? It will be your PPE. Or by the owner or by the lessee under a lease as a right of use asset, or if there is a owner, right, and the owner is using that property for the business purposes, it is your PP. Or the lessee who has taken this property on a lease basis and the lessee is using that building, using that property for the business purposes, that right of use asset will not be investment property. That right of use asset will be PP, right? If I am a lessee, I have created a right of use asset. If I am subleasing that property, that right of use asset will be investment property. if I'm using that building, using that property for my business purposes, that right of use asset will be PP, right? Is it clear? Is it clear? I hope it is clear to everyone. Yeah. Now let's discuss dual use properties. So intentionally, I have left that point number 5, and that point number 5 was talking about there was a property where it is partly used for business purposes, partly used for office purposes. Rental purposes. So friends, in some cases, the investment property is held to earn rental or for capital appreciation or both. But some properties where partly it is used for business, partly it is used for rental, right? What happened in that case? Standard says that if the portions could be sold separately, right? If the portion could be sold separately or these could be leased out separately, in that case, the entity is required to account for those portions separately. For example, there is a building. In building, there are 2 floors. Floor number 1, floor number 2. The floor number 1 is used for rental purposes. The floor number 2, the second floor, is used for business purposes. Standard says that if this floor can be sold separately, right? Yes, it can be sold separately. If this floor can be leased separately, yes, it can be leased separately. So standard says that in that case, the whatever is the value of the building, the value has to be allocated between these 2 floors separately, right? And the floor which is used for rental purposes, for example, the value of the building is 1 crore, right? The cost of the building is 1 crore. 50 lakh is apportioned to the floor number 1. 50 lakh is apportioned to the floor number 2, right? So standard says that if the property is having a dual use, it is using for the rental or capital appreciation purposes, it is held for business purposes. So standard says that, so whatever portion is used for rental purposes, that portion has to be shown as an investment property. The portion which is held for business purposes, that portion has to be shown in the balance sheet as property, plant and equipment, as owner occupied property, right? But if these 2 portions could be sold separately, could be leased out separately, of course, it means these 2 portions are separable. If these 2 portions are separable, in that case, the entity has to account for these 2 portions separately, right? The portion, I mean to say the floor, which is held for rental purposes, it has to be shown under investment property. The floor which is held for business purposes, it has to be shown under the Ind AS 16 property, plant and equipment. I hope it is clear to all of you guys. I hope it is clear to all of you. Is it clear to all of you, friend? Is it clear to all of you or not? Tell me. Yeah. Is it clear? So in question number 5, let's come to point number 5. Property partly owner occupied and partly leased out under operating lease, right? So in this case, the both standard will be applicable, Ind AS 16 and Ind AS 40, right? So it will be depends. Clear? Is it clear, friends? Is it clear or not clear? Tell me. Is it clear or not clear? Good. Yeah. So this is an example. For example, OBC Limited owns a building consists of 10 floors. It uses 7 floor as its own office and re-aiming these 3 are leased out to, and the remaining, not re-aiming, this is remaining. Remaining 3 are leased out to tenants under operating lease, right? So 7 floor is for own office purposes, means 7 floor is Ind AS 16 and the 3 floor is Ind AS 40. Under the company's country law, company can liberally transfer the title of individual floors independent of other floors in the building, right? In the given scenario, 7 floors should be classified under Ind AS 16 as PP, and the remaining 3 floors as an investment property, since they are able to split the title between the floors, right? They are able to split the title between the floors. Is it clear? Right? I hope it is clear to all of you guys. Dual use property is there, but it is unable to split, right? In that case, what happens? If the portions could not be sold separately, the property is investment property only if an insignificant portion is held for use in the production or supply of goods or services or for administrative purposes. For example, there is a floor. The company is having one floor, right? So this is a floor. And this floor is having, let's say, 4 rooms. There is one floor and there are 4 rooms. Room 1, 2, 3, 4, right? I'm talking about single floor. In single floor, 4 rooms are there. And on that floor, a single toilet bath is there. Single kitchen is there, right? So the company is using one floor for business. Sorry, the company is using one room for business purposes, one small room for business purposes, and the company is using 3 rooms for, let's say, investment property purposes, means rental purposes. And on one floor, there are 4 rooms, one common toilet bath, one common kitchen. So the company will not be able to sell these 4 rooms separately. Am I right? The company will not be able to sell these 4 rooms separately. That I can sell one room, I can sell a second room to separate to 2 different persons, right? So these 4 rooms cannot be sold separately, right? Now the question arises. In this case, there is one floor and the floor is used for business purposes as well as for rental purposes, or let's say for undetermined future use. The 3 rooms are for undetermined future use. It is lying vacant. It is not using for business purposes, not using for any purposes, right? And in a small room, the company is operating its business. Now the question arises. The cost of that floor is, let's say, 1 crore rupees. So whether that floor, and of course it is not separable, the rooms are not separable, it cannot be sold separately, right? Now the question arises whether that entire floor will be investment property, whether that entire floor will be property, plant and equipment, or the portion pertaining to 3 floors has to be shown as investment property. The portion pertaining to 3 rooms has to be shown as investment property. The portion pertaining to 1 room has to be shown as PP. That cannot happen, because the first condition is, if the portions could be sold separately, in that case, those portions has to be shown separately, right? But in this case, it is very much clear that these portions could not be sold separately. And this is the situation. Now you tell me whether that floor in this condition, in this situation, whether this floor, which is having 4 rooms, 1 room is for business, 3 room is for rental. So whether this floor has to be shown as investment property or this floor has to be shown as Ind AS 16 PP. Yes, Manini is saying on the basis of majority of use. You are right, Manini. Right. If it is not separable, you have to look at what is the significant portion. In this case, the significant portion is rental. So in this case, it has to be shown as investment property. But what happens if the 3 rooms are used for business purposes and 1 room is held for rental purposes? Then what will happen? Again, going by the use of the significant portion. If the significant portion is used for business purposes, then it has to be shown as PPE. It has to be shown as PPE. Koshiki, it cannot be proportionally accounted because it is not meeting the basic condition. What is the basic condition? The basic condition is whether it can be sold separately. If answer is yes, do the proportion accounting. If it cannot be sold separately, in that case, you have to look at what is the significant portion of use. What is the significant portion of use, right? Is it clear? Is it clear, guys? Yes or no? Is it clear? Any doubts so far? Who is asking, sir, 2 room for business purposes, 2 room for investment property? Then in that case, the management intention is also required to be checked, right? The management intention is also required to be checked. If the management intends to show it as an investment property, then it can be shown as investment property. If management intends to show it as a business purposes, in that case, it will be shown as a business purposes, right? Is it clear? So Manini, I have replied for this question. If equally divided and not separable, so in that case, you have to look at the judgment. Okay. For example, the management is saying that I have to expand my business, and since I am not requiring more than 2 rooms, and hence I have given these 2 rooms for rental purposes and these 2 rooms for business purposes. So probably these 2 rooms are, as of now, it is undetermined. But if tomorrow my business will expand, I will use that. For my business purposes. Okay. So in that case, it has to be shown as a PP. Or probably, if let's say 3 rooms are kept idle, right? 3 rooms are kept idle, and in on the 1 room the business is going on, right? If intent is that whenever my business will get expanded, I have to use these rooms for my business purposes also. In that case, you can show it as a PPE, right? So again, in these kind of cases, judgment is very important, right? If the property is not separable, the dual use is there. In that case, you have to look at what is the significant portion. While looking at the significant portion, you have to keep in mind, for example, if something which is vacant and where you are operating your business, so instead of saying that the major significant portion is investment property, rather it is better to show it as a PP. Are you getting me? Are you getting me? So I have 4 rooms in my property. 2 rooms are vacant. 2 rooms in 2 rooms are used for business purposes. So from 2 rooms, I am getting a future economic benefit. 2 rooms are vacant. So in this case, it is better to show this entire property as a PP, I would say. But if 2 rooms are for rental, in 2 rooms the company is earning rental. In 2 rooms the company is operating its business. It is equally divided and it is non-separable, right? In that case, the auditor or the management has to look at the intent also, look at the judgment also. What is the judgment of the company, right? So according to that, the decision has to be taken. Is it clear? Is it clear, guys? I hope it is clear to all of you. Yeah. So guys, it's 8:20 now. Let's have a 10 minutes break. And after break, we will start the remaining concept of the session, right? Remaining concept of the standard. So let's have a 10 minutes break. Kartik is asking, sir, if 3 rooms kept idle, will we assume undetermined use and hence investment property, or we see management intention? So again, guys, let's understand this thing, right? So standard is talking about undetermined future use for a complete property, right? If there is one floor and there is already a use of that floor, we are only using a portion of that floor, but we are using, right? And we are using for the business purposes. Being a prudent auditor or being a prudent investor or being a stakeholder, tell me, if there is one floor and the floor is getting used, only an insignificant portion or only a portion is getting used, the remaining portions are just lying idle, will you say that no, it is an undetermined future use and it is inseparable, right? So it is inseparable, it is not separable, means you cannot proportionate, you cannot separate. So will you say that yes, my building is, or let's say not building, my property is getting used, or you will say my property is not getting used? First of all, what you will say? Tell me. You will say my property is getting used, yet I'm using this property in my business purpose. You will not say, na, my property is lying vacant and I'm using a small portion. You will say I'm using this. There is only a little use, but I am using. That's all, right? So in that case, the prudent scenario would be, if the property is lying vacant, a portion is lying vacant, and a small portion is getting used. So the classification should be made, in ideal scenario, the classification should be made on the basis of what is the current use of this property, right? So in this case, ideally it should be shown as a property, plant and equipment, right? Again, let's take a second scenario. 50% is used as business purpose, 50% is used as rental purposes. Again, in that case, you have to look from the management perspective again, right? Because it is 50-50 and it is inseparable. Then you have to go by the management judgment, right? Because management has to classify that either as a PP or either as an investment property. So it is not like a scenario where management will say, no, we can 50-50 you can't do because it is inseparable, right? Then management will say, I want to show it as an investment property. Why? Then auditor will ask why, right? Or if management will say, I want to show it as a PP, again auditor will say why. So management has to provide its judgment and answer in support of that. For example, when management will say that I want to show it as a PP, then auditor will say why not investment property? Then management will say, look, 50% I'm already using and I am in the expansion of my business. Why I have given these 2 rooms on the rental basis? I have given these 2 rooms on the rental basis because as of now, I don't require such area, right? But yes, tomorrow, if I'll progress and I need to expand, of course, I don't need these tenants, right? Instead of moving to the other premises, I will use my own premises. And that is why I want to show it as a PP, right? You should have a logical answer to that. Second, if management will say, I want to show it as an investment property, auditor will say why. Then again, management has to come back and explain the auditors. Management will say, see, my business is not flourishing, right? And if I'll give this entire floor, entire property on a rental basis property, probably I will earn much more than that. Okay. And I want to shift down to a smaller premises where I will have to pay less rental, but I'll get more rental from this property, right? So that is why I want to show it as an investment property. So guys, whatever management wants to say, auditor need to look at what is the reason for that, right? Auditor needs to look at what is the reason for that. Okay. And if management and auditor both are satisfied, of course, the accounting will go as it is, because the standard is silent. The standard says that if it is inseparable, you have to see either 40 or either 16. So whether it should be 40 or 16, it will call for a judgment. Whenever it will call for a judgment, it will be supported by some assumption and estimates, right? So Koshiki and Manini, have you got this? Yeah, Tanuku, Viraj, have you got this thing or you haven't got this thing? Is it okay, guys? I hope it is clear to all of you, friends. Yeah. Viraj is asking, sir, again, Viraj has talked about the dam, which is in the Tata Power balance sheet. Viraj, have you a dam in the books of the Tata Power? Have you saw the dam in the books of Tata Power as a PP? I don't think the Tata Power has shown it as an investment property. I don't think so. Even I don't think if the Tata Power has something in their investment property, right? So normally what happened, Viraj, let me tell you. Normally this dam, the power generation facility is associated with the dam, right? The power generation facilities. When I'm talking about power generation facilities, these are the property, plant and equipment, right? For example, I have a power generation facility, right? For example, Tata Power is having a power generation facility, right? Power generation facility. Tata Power is having power generation facility. If the Tata Power is leasing that power generation facility to some other power distribution companies, in that case, it is not an investment property, it is a PP, right? Even if a company is leasing the machinery to the other company, if the company is giving the machine on a rental basis to other entity, this is again a PPE, right? This is again a PPE. Okay. So likewise, this power generation facilities will be PPE, will not be an investment property. And so far, my understanding is concerned, there is no PP, there is no investment property in the books of Tata Power, right? So this dam is never an investment property, right, guys? Manini is asking, sir, if management judgment is for both and not separable, then how it will be classified? Manini, management is something who have to own the books of accounts, right? It is not like that. It is again a 50-50. It is not like that. It is again having a same weightage. So management has to tilt towards one thing. What is the highly effective thing, right? What is the how management will close its books of accounts? The responsibility is not for the auditor, the responsibility is of the management. You tell me how management will close that, right? Is it clear? Management has to come to one thing, na. They cannot say na it is always 50-50, right? So again, if it is 50-50, then they have to go by merit. I mean to say, whatever they want to show, they have to show that according to that only, right? Is it clear? Is it clear? Yeah. Because the standard is silent regarding that. Okay. Yeah. Now let's come to the ancillary services. Friends, for example, the company has owned a flat in a society, right? And in the society, the maintenance service is there, the security guard service is there. So the question is, if with the property, if the ancillary services are also provided, in that case, whether that property will be investment property or that property will be PPE, right? Because in some cases, the entity provide ancillary services to the occupants of a property it holds. An entity treats such a property as investment property if the services are insignificant to the arrangement as a whole, right? What does it mean? What does it mean? Since if a company has purchased a flat in the society and the company is also providing the maintenance service and the security guard service, right? So this maintenance and security guard service is a very insignificant portion in comparison to this entire property, right? This entire flat. So the point is whether this will be investment property or this will not be investment property. So of course, in this case, this will be investment property because this maintenance or security guard service is not a significant portion in comparison to the arrangement as a whole, right? For example, when the owner of an office building provides security and maintenance service to the lessee who occupy the building. So the point is, if the owner is providing providing some ancillary services and the owner is also leasing that property. So should it call as an investment property or should it call as a PPE? Should it call it as a business model like a PPE or should it be called as an investment property? So that is the question. But if the ancillary services are significant, for example, hotel services, right? So tell me one thing, when you go to hotel, are you only looking at the room? Are you only paying for the room or you are looking at the services also like food, like location, like the premises, right? Like the services. So what you are looking at, are you only looking at the room? Yeah. Or you are looking at the, where it is located, whether it is a happening place or not, whether it is a peaceful place or not, whether there are something, some indoor activities are not, in outdoor activities are not. So how's the breakfast, how's the lunch, so how's the food, right? So what kind of services are there? So what you are looking at, are you only looking at the room? Answer is no. And whenever you call to any hotel building, they are only talking about our services are the best, right? Our services are the best service, right? So there, if I talk about the hotel, we are talking about the facilities. Like if you want to get iron, the facility should be there. If you want to have a room service, it will be there, right? A lot of services are there. In that case, for example, there is a, let's say the Tata Group has hotels also, Taj. So this Taj Hotel company is owning hotel. They have hotel building and they are letting out these hotels, building, I mean to say rooms to the customers. So first of all, tell me whether they are called as a customer or they are called as a tenant. Tell me whether the hotel call it as a customer or they call it as a tenant. Tell me. They are calling it as a customer. They are not calling it as a tenant, right? It is not like a contract between them that we have to occupy this room for 1 year, right? It is not like that. So friends, if I talk about this Taj Group, if I talk about Hyatt, if I talk about ITC, if you will look in the balance sheet of these groups, the hotel building which they own, the hotel building which they have taken on a lease basis, they have created a right of use asset. So whether that will be shown as a PP or that has to be shown as an investment property, tell me what should be there. Tell me what should be there. Whether this hotel building which is having 100 rooms, so whether it is an investment property or it is a PP, tell me whether services are significant portion to the arrangement as a whole or services are insignificant portion. Services are a significant portion. The person are going to stay in hotel for a comfortable stay. Comfortable stay does not mean a bed and does not mean 4 walls and a roof or a ceiling. Comfortable stay means comfortable facilities, right? And hence, in this case, the facilities play a very important role where you look at whether swimming pool is there or not, whether you will look at whether a spa is there or not, whether that iron facility is not there or not, whether the food is there or not, right? Okay. In that case, the services are significant and hence all these hotel building has to be shown as a property, plant and equipment. Standard says if the services are significant to the arrangement as a whole, it has to be classified as a property, plant and equipment, not as an investment property, right? In other cases, the services provided are significant. For example, if an entity owns and manages a hotel, services provided to guests are significant to the arrangement as a whole, and therefore an owner managed hotel is an owner occupied property, I mean to say Ind AS 16, rather than investment property. So guys, I'm talking about ancillary services. if the ancillary services are significant to the arrangement as a whole, it will be classified as an investment. It will be classified as a property, plant and equipment, not as an investment property. And hence, all these hotel companies are showing this hotel property. Doesn't matter it is owned or it is leased. So they are showing it as a property, plant and equipment, right? Is it clear, guys? I hope you guys have understood this thing, right? So what we have discussed so far, what is an investment property, right? So investment property is a land or building which is held for capital appreciation or held for rental purposes, right? Even though if it is a right of use again, it is your investment property, right? Then we have understood what could be the example of investment property. So any property which is held for long-term capital appreciation is an investment property. Any property, when it is acquired, the use is not determined. So at the time of acquisition, there was no clarity on use. So it will be classified as an investment property. Or when it is acquired, it was clear that either it has to be held for rental purposes. It will be classified as investment property. Or when it was acquired, the intent of the company will be do the construction and use in future as an investment property. Again, it will be investment property. What is not an investment property? If the objective is to sell in the ordinary course of business, the objective is to short-term sell, then it is not an investment property, it will be inventory. If it is owned by a company and it is given on a lease, given on a finance lease basis, in that case, the asset will not be there in the balance sheet and hence the question will not arise whether it is PP or investment property, the question will not arise. Third, if that property is used in the business purposes, it is held for use in the production or supply of goods and services, doesn't matter. It is used for the office purpose, it is used for the factory purpose, it is used for the warehouse purpose, doesn't matter if it is for the business purpose, it is a PPE, right? Then we have looked at if there is a dual use, right? It has to be used in the business also, it has to be used in the for the rental purpose also. Dual use, right? The use is dual. So in that case, the first trigger is you need to look at whether these two different portions are separable. If answer is yes, for example, two different floors are there and it can be sold separately. It have a different market value, right? It has its own value. In that case, the respective values has to be shown as a respective assets. The investment property has to be shown as investment property. The PP has to be shown as PP, right? If there is a dual use, but the split is not available, the split is not possible, right? It cannot be sold separately. In that case, you have to go by the significant portion. If significant portion is not there, right, it is equal, then you have to go by the management judgment, right? But of course, both the possibilities are there. Again, if along with the property some services are also given, then you need to see what is the arrangement, whether the arrangement is a complete arrangement, whether the arrangement in comparison to the arrangement, if the services are also significant, right? For example, if someone is buying a flat, of course the flat is more significant than the services which is there. But if I talk about the hotel, the services are more important than the highly important, right? Services are highly important, right? Because people are going for the comfortable stay, right? So friends, that is why these hotel building are shown as a property, plant and equipment. Okay, understood? So we have talked about these 3-4 aspects so far. I hope it is clear to all of you, right? Viraj is saying Infosys Limited hold building for its employees stay in Mysore campus. Occupancy charges received from employee for its use. Is India's 40 is applicable for this building? So Viraj, in that case, two things is important. Two things are important. One, if Infosys is charging a concessional rate from the employees, right? And it is only for the employees. In that case, it is not an investment property. But if Infosys is open to provide this building to employees as well as others as well, right? And whatever they are charging on the market rate. In that case, it will be investment property, right? Is it clear? I hope it is clear to all of you. Then coming to the recognition, friends, if I talk about the assets, for any asset, two conditions should be there. What are the two conditions? Fixed cost, FC. F stands for future economic benefit. C stands for cost can be measured reliably. You pick any asset-based standard, these two conditions should be satisfied. So investment property should be recognized as an asset when it is probable that an future economic benefit will flow to the entity and cost of the property can be measured reliably, right? And the cost of the property can be measured reliably. Okay. For example, the company has acquired a property for capital appreciation in future. When the company has acquired the property, the company has purchased the property, the company has paid, everything is there. But after the purchase, company got to know that this land is a disputed land. And this land is an agriculture land where, where no any future use is there, or this land could not be sold out. The government has given these lands to farmer, and this is not sellable, right? But the company has purchased this land from someone, and so every time registry will not be there. Sometimes there is a power of attorney, right? Sometimes there is a normal transfer. Okay. So guys, when this thing happen, tell me whether it is probable that the future economic benefit will be available. Yeah. So already a court case is going on. So the land become disputed. It could not be sold out, but whatever investment the company has made, whether can be shown as an investment property because it's an asset, and the asset should be there in the balance sheet when two conditions will be satisfied. First, cost can be measured reliably. Yes, we are aware about the cost, but whether future economic benefit is probable from that land, answer is difficult. Yeah, answer it is not probable. So, and hence it should not be shown as an investment property, right? Is it clear? What is your question? Manini, please post your question again. Right, guys? For recognition, two conditions should be satisfied. It is probable that any future economic benefit will flow to the entity. The cost of the property can be measured reliably. You remember when I taught you property, plant and equipment standard? Again, the same condition was there. PPE should be recognized as an asset when it is probable that the future economic benefit will be available and cost can be measured reliably. And I have taken an example of a machinery. The company has purchased a machinery from China. And when the machinery came to India factory, the government has banned the output which is there from that machinery. So in that case, the cost is there, but the future economic benefit is not probable. And hence that item has not to be shown as a PPE asset. That has to be expensed off, derecognized, right? Is it clear, guys? Now, recognition we understood, but what is initial measurement? So it has to be initially measured at cost, like PP. And you remember in PP, what should be included? Cost includes purchase price, right? Any non-refundable taxes, less any trade discount and rebate, plus directly attributable cost like transaction cost, like registration charges, brokerage, property taxes, right? So if there is any directly attributable cost, it has to be added to the cost, right? Such cost should not include, like same in case of Ind AS 16, startup cost, abnormal waste, initial operating losses incurred. So these will not form part of the cost. These will form part of the P&L, right? Subsequent measurement, guys, on the reporting date. Friends, when we discussed PPE, Ind AS 16, PPE, in PPE for subsequent two models are there, cost model, revaluation model. Revaluation model is nothing, it's a fair value model. So friends, in Ind AS 40 investment property, this revaluation model is not permitted. This fair value model is not permitted. It is permitted in IFRS. IFRS allows cost or revaluation, but Ind AS does not allow revaluation, right? In Ind AS, we have taken a carve out. Why? Because earlier we were using AS, accounting standard, and accounting standard does not allow fair valuation for investment property. And we have transitioned from AS to Ind AS, right? So many companies which were, loss-making company, but they have convert their balance sheet from from a weak balance sheet to a healthy balance sheet, right? For example, the company is regularly incurring a losses, right? So they are having a negative net worth, but they have 1,000 crore of plot of land, right? So earlier they were applying the cost model, and the cost of the land is 10 crore, but now it is worth 1,000 crore, right? So that they cannot show it on a fair value model, right? And probably the investor community or the stakeholder will not get deviated that, oh, this company is a very sound company, right? But the company is running into cash crunch, and probably if the company will not be able to sell out that plot of land, that factory, that land, the company will be in the continuously cash crunch. So when we moved from AS to Ind AS, we have decided that we will not allow fair value model on investment property, because we know that the companies which have purchased this land building 50 years ago, they have a huge fair valuation right now, right? And so that the user will not be influenced by those values in the books of account, which is not a converted value into cash, right? So, and that is why we have not allowed the fair valuation model on investment property, right? But what we have told in Ind AS, that you cannot subsequently measure your investment property on fair value, but you have to disclose the fair value of the investment property in the notes to accounts, so that the user will be able to understand, okay, your net worth is negative, you are into losses, but you have an asset worth rupees this much of crores, right? So it has to be disclosed in the notes to accounts, but it is not required to be recognized and measured on the basis of fair valuation. So friends, initially it has to be measured at cost like PP. Subsequently, only cost model is applicable. Only cost model is applicable means the subsequent measurement will happen at cost minus accumulated depreciation minus accumulated impairment losses. If it is a land, in that case, land will not depreciate. Of course, you need to check the impairment, but land will not depreciate. But if it is a building, of course, cost will be there. If the life of the building is 30 years, 50 years, so you have to depreciate that building, right? And if there are impairment indicator, you have to check the impairment losses also, right, guys? So this cost model is cut, copy, paste, whatever we have discussed in Ind AS 16 or Ind AS 38, right? Fair value model is not allowed, is allowed in IFRS, but not allowed in Ind AS. And that is why we have taken a carve out in Ind AS regarding this. But the disclosure has to happen, right, guys? Is it clear? Is it clear? Manin is asking, land of company occupied by slum area people, and after occupied by them after 12 to 15 years, the title transferred to them then. So Manini, tell me on the time of initial recognition, right? So whether that land belongs to the company or that land belongs to the government or slum area, is it a case of encroachment? Or so basically I haven't understood your question. Is it a case of encroachment? The land belonged to the company, but they have occupied that land. Is it that kind of a case? Let's understood this in a different manner. For example, the company has purchased a land, right? And the slum people have encroached that land, right? Now the question arises, first of all, if the company has purchased that land, right? Whether the company has purchased the land for business purposes, answer is no. The company has purchased the land for rental purposes, answer is no. So whether the company has decided the future of this land, answer is no. So what does it mean? It means it is undetermined future use. It is undetermined future use. So if it is undetermined future use, then there is a rebuttable assumption that it has to be for the capital appreciation. Okay. And if the legal title is in the name of the company, right? So in this case, if it is for undetermined future use, it is shown as an investment property, right? But if the encroachment is there, the dispute may arise, right? And it is probable that the company will not be able to get the future economic benefit, or the future use is rental or capital appreciation, it has to be impaired. Understood? Yeah. Manini, have you understood this? Right, guys? Cost model we have discussed. So it has to be measured at cost. Cost model will apply same as of India 16 PP. You have to depreciate at every reporting period. You have to check impairment if impairment indicators are there at every reporting period, right? So the same formula, cost minus accumulated depreciation minus accumulated impairment losses is equal to carrying value. Right, friends? And you have to require to show this fair value in the notes accounts. You are not required to apply fair valuation in your measurement, in your subsequent measurement. You have to show it in your notes to accounts, right? Whether my voice is clear now? Whether my voice is clear now? Basically, what I have explained, Manini, right now, let's say the company has acquired a land, right? And at the time of acquisition, the company was not clear what is the future of that land. I mean to say, the company is not clear whether the company will construct a factory, or the company will construct the building on that land and sell those buildings, or the company will use that building for the rental purposes. The company is not clear about that, right? The company is not clear about that. And after some time, there are some slum people who have done the encroachment on that land, right? Okay, so they have done the unauthorized occupancy. They have unauthorized occupied that land. So basically, in this case, if there is an undetermined future use, or the future use is rental or capital appreciation, it has to be shown as an investment property. But if somebody who has acquired that land on an unauthorized basis, and it become disputed, and the company does not foresee that the company will be able to get the future economic benefit, in that case, the land is going to be impaired, or the land is going to be re-recognized, right? Because the future economic benefit is not probable. But till the time the future economic benefit is probable, either there is undetermined future use, or either there is a clear-cut future use of rental or capital appreciation, that land has to be shown as an investment property. Doesn't matter whether encroachment is there or encroachment is not there, right? Is it clear? I hope it is clear now. Friends, let me know if there is any unanswered question so far. Please do let me know. Is there any unanswered question so far? Okay. Yes, transfer to or from investment property. Guys, now this concept is a very important concept, even from examination perspective as well. For example, at the time when the company has purchased a building, right? So that time the company was using that building for rental purpose, right? Suppose since the company was using that building for rental purposes, of course, it was an investment property. But due to expansion of business, now the company decided to use this building in the business for the business purposes. Now the company decided to use that building for the business purposes. So in this case, the intent of the company, the objective of the company has been shifted from rental to the business purposes. So friends, tell me, if the objective has been changed, the nature of use has been changed, so it will change from investment property to owner occupied property, which is property, plant and equipment, right? Earlier my intent was either for capital appreciation, or my intent was rental, right? Earning rental. But now my intent is to use that building in my business. So the moment I'm using that building in my business, it will become a property, plant and equipment, right? For example, I have purchased this building on 1st January, or let's say 1st April 2020, until 31st March 22, I have earned rental from that building, right? So on 1st April 2020, I have shown that building as investment property, measured it at cost. And on every reporting date, I have applied cost model only, because revaluation model is not allowed. And for the year in the disclosure, a fair value. Now the question arises, on 1st April 2020, when I have shifted from investment property, I have shifted from the use as a rental to the business purposes, whether I need to transfer it to the PP? Answer is yes. I have to debit my PP and credit my investment property. But what is the opening value of the investment property? Sorry, what is the opening value of the PP in that case? Are you getting me what I'm trying to say? So I am trying to say, on 1st April 20, I have purchased a building which is held for rental purposes for 50 lakh rupees, right? On 31st March 21, what I'll do? I'll depreciate this building, right? And I'll check the impairment also. Let's say impairment is not there, but I'll depreciate this building. For example, the depreciation is 5 lakh rupees, right? So the carrying value will be 45 lakh rupees. Again, on 31st March 22, the carrying value of investment property is 40 lakh rupees, right? Now, I have started using this building from 1st April 22 for my business purposes. So what is the opening value of PP? So standard says that the opening value of the PP will be the closing value of the investment property. Means you have to debit PP. In my example, you have to debit PP by 40 lakhs and you have to credit to investment property, to IP, by 40 lakhs, right? So the carrying value on the date of change in the nature of use, the carrying value of investment property will become the carrying value, will become the opening value of the PP, right? Is it clear? Is it clear or not clear? Second example, the company was having 5 buildings and the company was using all these 5 buildings for the business purposes. So it was PP. It was PP. Now after COVID, majority of the employees are working from home. So now the company has, out of 5 buildings, the company has decided to earn rental from 2 buildings, and the company will run its office from 3 buildings, right? Because either they are calling their employees on a rotation basis, or let's say 50% of the employees are working from home. So friends, till the time the building was used for business purposes, it was PPE. When the nature of use has been shifted to earn rental for those 2 buildings, it will become your investment property. It will become your investment property. Now the same question arises on 1st April 2020. The company has purchased a building for 50 lakh rupees, right? Till 31st March 22, The company has used that building for business purposes. From 1st April 22, the company wants to lease out this building. So what is the opening value of investment in property in this case? Standard says that the closing value of the PP, the closing value or the carrying value of the PP on the date of change of use will be the opening value of the investment property, right? So this is the concept, right? Is it clear, guys? Is it clear? Raj, what is clear? Why you are saying would have been more appropriate if the transfer only the company is shifting the nature of use, and if the company is shifting the nature of use, they have to or a overstatement in the books of accounts. For example, I am a company, right? And I want to inflate my books of accounts, right? So I know that my 10 crore property has become 1000 crore, right? And I am only opting for a cost model. I have not opted for a revaluation model. I have opted for a cost model, right? So when I opted for a cost model, I am showing that property in the books of accounts as a, I'm showing that PPE on the basis of cost, right, which is 10 crore. But now I want to show it on 1000 crores. So what I'll do, I'll say that, oh, let's do one thing. Let's discontinue using this building for business purposes, and let's lease out that building. Okay, let's stop doing business here and start searching for a tenant. Okay, so whenever I'm starting searching for tenant, I am saying that my intent and my nature of use is shifted to unrental. Okay, and according to Tanuku, let's say it should be at fair value. So even I have not started earning rental. I have just I have just manipulated the use. I have stopped business and started searching tenant. So this, I have converted this 10 crore to 1000 crores, just showing the change in the nature of use, right? And after 1 year, so my intent was never to earn rental. My intent was just to inflate my books. So after 1 year, what I did, I said that, okay, now again, I want to do the business in this property. And now either I have to, transfer this investment property to PP either at cost means at the carrying value. So now carrying value become 1000 crore, or even it is at fair value, the fair value will something related to that amount only. So don't you think you are just doing this adjustment in your books of accounts? It is not going to outsider. It is not going to the outsider party. You are just changing the use, right? So why standard has talked about the carrying value? The standard has talked about the carrying value so that the manipulation cannot happen. Have you understood this? Tanuku, have you understood this? Yeah. So why they have talked about the carrying value? Viraj, what is not clear? Can you please confirm what is not clear so that I would be able to explain it again? So guys, moral of the story is, if the nature of the use will change, okay, the classification of the asset will also change, right? If the nature of use is changing from rental or capital appreciation to business purpose, the IP will become PPE, right? Now the question arises, what would be the opening value of PPE? The opening value of the PPE will be the closing value of the IP. If the nature of use is shifted from business purposes to rental or capital appreciation, the classification will change from PPE to IP. Now the question arises, what will be the opening value of the IP? The opening value of the IP is the carrying value of the PP. That's all, right? Is it clear? Is it clear, guys? Whether my voice is clear to all of you? Because one or two participants are saying the voice is breaking. Is it clear now? Is it clear now, friends? Yeah, good. Yes. So now the third one. So first we have discussed, second we have discussed. Now let's say the third one, investment property. So the company has, the company has purchased a land or building, and it was of course an investment property. It was held for rental or capital appreciation. But now the company has, the company wanted to convert this into the flats or bungalows, and the company wants to sell this flat or bungalows, right? So the nature of the use has been shifted from IP to inventory, right? So the company has changed its business model. Let me switch off my video for some time. Probably then it will be okay. Let me switch off my video. I hope it is okay now. So friends, the nature of use has been shifted from IP to inventory. If the nature of use has been shifted from IP to inventory, again the question would arise: what is the opening value of the inventory? So the opening value of the inventory is the closing value of the IP. Again, it has to be carried at carrying value. It has to be shown at carrying value, right? Clear? The fourth one: earlier there was an inventory. For example, the land or building was used for the purpose of sale in the ordinary course of business. But now the company don't want to sell those assets, right? In the ordinary course of business. Now the company is saying, no, I don't want to sell. I want to keep it for a long-term purposes. Whenever you are saying long-term, it will be shifted from current to non-current. Inventory is a current asset. Investment property, PPE, these are the non-current assets, right? These are the non-current asset. Okay. Yeah. So guys, earlier it was an inventory. Now when you are saying that I want to hold it for the long-term purpose, or keep this asset for earning rental purpose. So it will shifted from IP to in IP. So it will be shifted from inventory to IP, right? So when it will be shifted from inventory to IP, now the question arises: what is the opening value of IP? The opening value of the IP is the closing value of the inventory. For example, on 1st January 2021, the company has invested in some properties, and those properties are inventory. On 31st March 22, the company has revalued those inventories. I mean to say the company has remeasured those inventory, because inventory standard says that the inventory has to be measured at cost or NRV, whichever is lower, right? So whatever is the carrying value of the inventory on 31st March 22 will be the opening value of the IP on 1st April 22, assuming that the nature of use has been changed from 1st April 2022, right? I hope it is clear to all of you guys. I hope it is clear. Is it clear, friends? Good. Very good. Transfer, I think, clear to everyone. Now let's discuss one case study on the transfer to IP. PQR Limited owns a building which it has been using as a head office. Head office means it was PPE. In order to reduce the cost, on 30th September 2016, it moved its office functions, its head office functions, to one of its branch, and is now letting out its head office. Company was using cost model under Ind AS 16. Right? So on 30th September 2016, September 2016, this PP was shifted to IP, right? Because the nature of use has been shifted. The building had an original cost on 1st April 2010 for rupees 50 lakh and was being depreciated over 25 years. The life is 25 years and the cost is the cost is 50 lakh. So what is the depreciation per annum? What is the per annum depreciation? 2 lakh rupees is the per annum depreciation, right? Okay. So we are talking about 30th September 2016. it means we have to compute the carrying value of carrying value of PP as on 30th September 2016 after deducting the accumulated depreciation. And on 31st March 2017, the fair value was also given. It means after shifting to IP, investment property, on the reporting date, the fair value was given. What is the use of this fair value? What is the use of this fair value? Since in investment property, the fair value model is not acceptable. We have a carve out. So what is the use of this fair value? Yes, you're right, Rahul. This fair value is required to be disclosed in the notes to accounts, right? This is only for the disclosure purposes, right? This is only for the disclosure purposes, right? Okay. And probably you can use this fair value for impairment purpose also. For example, the fair value is lower than the carrying value. In that case, what will happen? Impairment will be triggered, right? You are required to show the treatment in accordance of relevant standard in the financial statement as on 31st March 2017. It means it is talking about Ind AS 16 and Ind AS 40. So the original cost was 50 lakh. The depreciation till 31st March 2016 means for 6 years. It is 12 lakhs. The carrying amount on 1st April 16 is 38 lakhs. And the depreciation for the 6 months till 30th September 2016, it is 1 lakh. The carrying amount on 1st October under Ind AS 16 is 37 lakh. This carrying value under Ind AS 16 will become the opening value under Ind AS 40, right? This will become Ind AS 40 value, right? So the transfer to investment property, from not under Ind AS 16, under Ind AS 40 will be 37 lakhs, right? So what is the accounting entry? IP account debit to PP at what value? 37 lakh. And once it become your IP, the depreciation continue to happen. The depreciation is not applicable on land, but the depreciation is applicable on building, right? So even the accounting entry is also given. Debit building IP Ind AS 40, 37 lakh. Credit building PP Ind AS 16, 37 lakh. Okay. So from 1st October to 31st March 17, you have to charge depreciation, which is again 1 lakh rupees. The carrying value on 31st March 2017 will be 36 lakh rupees, the carrying value, right? So the fair value is 40 lakh rupees. So the fair value is more than the carrying value, impairment will not happen. But this fair value is required to be disclosed in the notes to accounts for this investment property, right? But if this would be the PP, right? And the company has opted for the cost model and this would be the PP. In that case, the fair value is not required to be disclosed in case of PPE, right? But in investment property, since it is an investment property and the intent is capital appreciation, in that case, standard requires that the management has to disclose the fair value so that the user will be able to understand what is the value of this property, right? Right, friend? Viraj, can you just post your question again? Derecognition condition same like PP. When a investment property will be derecognized? When it is disposed of. When it is disposed of. Or, so disposed of means actually sold out. Or it is permanently withdrawn from use. For example, permanently withdrawn from use means, so basically the use have been shifted, right? It has been moved from IP to PP or inventory, right? Or future economic benefit is not expected, right? For example, the dispute was happened and it was identified that the property could not be sold out, right? Or it could not be rented out. So again, it has to be recognized as IP. If there is any gain or loss on disposal, it has to be recognized in profit or loss as other income or other expenses, right? So how this gain or loss will arrive? Disposal proceeds minus carrying value is equal to your gain or loss, right? Disclosure requirement. Just I'll read that disclosure requirement is not relevant for the examination purposes. You have to disclose the accounting policy for measurement. You have to disclose the criteria used to distinguish investment property from owner occupied property and held for sale property. You have to disclose fair value of investment property. In the P&L, you have to separately disclose the rental income if it is there, the expenses incurred for generating rental income, right? The direct expenses that do not generate rental income, right? The expenses are there on investment property, for example, maintenance expenses, but there is no income from investment property. So that has to be shown separately, right? So these are the depreciation method, useful life, carrying value, accumulated depreciation. Just like PP, the reconciliation, opening, gross block, accumulated depreciation, closing value, net block. So this is required to be shown in the notes to accounts. Right, guys? So this is what that is there in the standard of Ind AS 40 investment property. It is a very small standard, very simple standard, right? And if you have understood Ind AS 16 and 38 very well, so this standard is just like a revision standard, I would say, right? Manini is asking, sir, transfer took place on September, then why depreciation charged for October to March, right? So Manini, from October to March, the depreciation have been charged as an investment property, right? So on 30th September or on 1st October, it was recognized as an investment property. But again, investment property has to be measured at cost model. What is meant by cost model? What is meant by cost model? Cost model means cost minus accumulated depreciation minus accumulated impairment losses. It means even though it is investment property, but it is continue to be depreciated. If there is a building, building will depreciate, right? Probably building will not be impaired, but building will be depreciated, right? Building will be depreciated. Okay, right? But land, if it is a land, land will not be depreciated, right? So 1st October to 31st March is depreciation as per investment property. Till 30th September 2016, it is depreciation as per Ind AS 16, right? So friends, if I'm talking about, what should I say? Yes, so Koshiki is also asking a question, transfer to or from PPE to or from inventory will also be at carrying value? Yes. Yes, it has to be at carrying value. This table, everything is at carrying value. That the manipulation or planning cannot happen in the books of accounts, right? Because it is something which is very subjective part, right? Parking building given on lease, whether property is classified as investment property. Friends, in that case, again, you have to look at Viraj. You have to understand. You probably have seen some parking buildings, right? Where a lot of facilities are there, right? A lot of facilities are there. Like there are some lever, there are some pulleys, right? So if the ancillary services are significant, right? Nowadays, mall parkings are where, there is lift-like parking. So at the one level, there are 3 cars which are there, right? There are multi-layer parking. So if there are a lot of facilities which is available in that parking, and that building has been constructed as a parking building, right? Building has been constructed as a parking building, and then it has been given on lease. It is not a investment property, it is a PPE. It is a PPE, right? But for example, there is a plot of land, and the temporary use of that plot of land is used as a parking, right? In that case, it will not be your PP, it will be your investment property, right? So I have replied. Viraj is asking, agricultural land held by temple used for agriculture by others for more than 15 years under Kul Kayada temple sacrifice ownership the land. Is Ind AS 40 applicable on agricultural land? Under Kul Kayada temple sacrifices ownership of the land. If the land is not in the ownership of the temple, then if something which is not there as a legally as a legal title to them, so how you can classify that asset? I'm not talking about whether IP, PP or whatever, but if it is not in, if the legal title is not with them, you cannot show it as a asset in their books, right? But yes, Ind AS 40 is applicable for agricultural land also, right? So Kosiki is saying transfer from inventory to acha. So transfer from inventory to PP and from PP to inventory, will it be a carrying value? See, your question is not answered by Ind AS 40, right? Because the transfer is from inventory to PP and PP to inventory. Now the question arises, just think logically. Let's say if there is an inventory which is transferred to PP, right? And the PP says that the initial measurement is at cost, right? So what could be the cost for the PP? The cost for the PP should be, and it is internal. First of all, you need to understand it is not a case of exchange of assets, right? It is not a case of exchange of assets. It is a case of internal change in usage. So whenever there is an internal change in usage, it should not be at fair value. That is very much clear. Until and unless standard says that the initial recognition is at fair value, right? So the inventory standard also talks about cost at the time of initial recognition. The PP standard also talks about the cost at the time of initial recognition. So in this case, if internally company is reclassifying from inventory to PP or PP to inventory, it will always be at carrying value, right? The carrying value will be the opening cost for the new asset, for the new classification, right? So although Koshiki, your question is not related to Ind AS 40, but yes, if it is between Ind AS 2 and Ind AS 16, either from 2 to 16 or 16 to 2, it will be at carrying value of the earlier asset, right? So my email ID is caalokgarg@gmail.com. You can share your doubts on caalokgarg@gmail.com, or you can share your doubts with the board of studies also, right? So Kosiki, I hope I have replied your answer. Viraj, I hope I have replied the answer of your query, right? So guys, let me know if you have any query, or let's recap the standard now. In the standard, we have understood that investment property is a property which is land and building, land or building, land, building held for rental or capital appreciation purposes. Initial and subsequent measurement is a cost model, but the fair value is required to be disclosed only. Fair value disclosure is required, right? No accounting policy choice for subsequent measurement using the fair value or cost model. It is a removal of option. I would say it is not a carve out, it is a removal of option, right? And under the cost model, IP has to be treated like a PP, means the same formula needs to be applied. Cost minus accumulated depreciation minus accumulated impairment losses. So it is to be treated like PP, means only for the sake of formula. It is not a PP, only for the sake of calculations, right? The calculation, the cost model is same cost model which is there in the Ind AS 16 cost model, right? Comparison, if we talk about between Ind AS and accounting standard, I have told you that there is no separate standard, but between Ind AS and IFRS, there is one removal of option or carve out. What is that? In IFRS, the fair value model is also allowed. In Ind AS, the fair value model is not allowed, only disclosure is allowed, right? Let's quickly discuss some multiple choice questions to check the understanding. Which of the following is not an example of investment property? Land held for undetermined future use, it is an example. Property leased to another entity under a finance lease. Property leased to another entity under an operating lease. So there is a property which is leased to another entity under an operating lease. It is an example of investment property. Property being constructed for future use in investment property, it is an example of investment property. Property leased to another entity under a finance lease. If it is under a finance lease, there is no asset in the books. So this is the right answer, B. Right? Question number 2. An investment property should initially be measured at market value, fair value, NRV, or cost. What is the right answer? What is the right answer? Of course, it is cost. Right? Question number 3. If an entity uses part of a building for their own use and rents the remainder, how should this be treated? If an entity uses part of a building for their own use and rents the remainder, right? All as investment property under Ind AS 40. Accounts for separately under Ind AS 16 and equipment in Ind AS 40 IP, all under Ind AS 16, none of these. Again, it depends. So if it is separable, then account for separately. If it is not separable, then you have to check the significant portion usage or judgment, right? But what is the appropriate answer in this case? It has to be account for separately under Ind AS 16 and Ind AS 40, right? Is it clear? Yes, you're right, Kaushiki. Assuming it is separately, it is separately sold. Entity using the cost model for investment property must also disclose the fair value of the investment property. True or false? Entity using the cost model for investment property must disclose the fair value of the investment property. True or false? It is true. Yes. Disclosure is required. Measurement is not required on fair value. Investment property after recognition should be measured at. It is talking about subsequent measurement. Cost or fair value model, cost model, NRV. What is the right answer for fifth? It is cost model, of course. Fair value model is not allowed, right? So thank you, friends. Thank you so much. So I have completed the standard and I have completed all the relevant portions of this standard, right, in detail with a lot of examples. And if you have any query, I'll wait for the next 1 minute, right? And so far I have replied and provided a response to all the queries. If I have missed any query, please post it separately so that I can answer it right now. Or if there is no query, so I want to conclude this session. My email ID is calokgarg@gmail.com. If you have any query in future relating to any standard, you can connect with me, right, through my email ID. I hope you guys have understood this standard very well. I hope you guys have. Viraj is asking length of answer to question in paper in number of important words. In number of important words. Viraj, I haven't understood your question. So Viraj, if I correctly understood your question, so first of all, if there is a question in the examination, you have to look at that what is the weightage of this question. If it is 2 marks, if it is 4 marks question, if it is 6 marks question, right? So you have to look at if the weightage is, let's say, 2 marks. So probably the answer should be in maximum in 2 or 3 lines or in 4 lines, right? If it is a numerical based question, of course, then the length is not important, the calculation is important, right? So you have to look in that manner, right? Kosiki is asking, sir, where business is about rental or capital appreciation, then property will be PP. Kosiki, if even the business is rental model, it is investment property, right? In that case, you have to look at one thing. For example, in hotel kind of things, like in OYO setup, OYO is buying building, right? And they are leasing that building for the purpose of hotel. So if the ancillary services are significant and it is important, the services are part of the arrangement as a whole, and these are the significant portion, it is a PP. But if it is only a simple rental business, right? In that case, it will be your investment property. Okay. Capital appreciation could not be the business model, right? I mean to say, so capital appreciation means keeping that asset for a long term, right? 10 years, 15 years, 20 years, 5 years, right? So if you are, even your objective is to keep it for long term and you are keeping it for long term purposes, in that case, you have to show it as an investment property, right? Kaushik is asking, sir, following principle of CFS, business is earning from rentals and capital, then it will be PP as per Ind AS 16. Following principle of CFS, which are you talking about, cash flow statement? Following principle, Koshiki, no. If it is land and building, and land and building is held for capital appreciation or business purposes, it is outside the scope of Ind AS 16, right? It is outside the scope of Ind AS 16, right? That cash flow statement talks about what is your operating activities, what is your investing activities, what is your financing activity, right? So the activities are different from the classification what you are doing in the balance sheet, right? And this investment property classification is only for two kind of assets due to the reasons which I mentioned in the initial part of the session, right? So it will be your investment property only. Sailendra is asking, land is used for agriculture purposes. In that case, Sailendra, it should be your investment property, right? I hope it is clear to all of you guys. So friends, now I want to conclude the session. Thank you so much for this, for making this small standard very interactive, I would say. And I'm really glad to take this session again with you guys. You are a brilliant student, I would say. And I want to wish you good luck for your exams, for your preparations, and for your future as well. And now I want to conclude the session. I hope you have enjoyed this session thoroughly. Thank you so much. Bye-bye. Take care, guys.